How's it going, YouTube? My name is Ari and welcome to Blue Lion Finance, a channel dedicated to investing in my personal journey to amassing $100,000 with my Vanguard brokerage account. And well, what do you know? The Santa Claus rally is certainly on and is building more and more momentum into 2022. Now, my account is by no means an exception here. We are up by $869.32, bringing my account to a brand new beautiful record high heading into the new year, sitting at $85,275.16. Now, given we are just about at the end of the year, I wanted to go ahead and share with you all the top 5 performing dividend stocks within my portfolio in terms of their rates of change, that being their stock share price at the beginning of the year to the present day. A video you're not going to want to miss out on, especially because I only foresee continued growth well into 2022 for all 5 of these dividend stocks. Now, most importantly, before we dive in, tap on that thumbs up button and help me grow this channel and get the word out there. If you haven't done so already, make sure you go ahead and tap on that subscribe button as well. I'd certainly love to have each and every one of you along for this ride with me. Now, YouTube, let's go ahead and dive right in. I don't know about all of you, but I am certainly excited to get down to talking about the top 5 performing dividend stocks within my portfolio.
Oh, behave!
At the very end of the video, I'm throwing in a bonus stock for you all. So really 6 stocks in total, but that last stock is actually a high growth stock. And I also want to share with you that right now, as we go through this video breaking down each of these 5 dividend stocks, it doesn't necessarily mean that this is a ripe time to be investing into these companies while we're experiencing that Santa Claus rally. I would wait about a week or two just to see where they're at, and if we come down from this rally, it might be a better time to be investing into them. Now, ultimately, we're going to be looking at the rates of change of each of these 5 companies and taking a look at how much momentum they have built over the course of 2021 and heading into the new year. Now, as I already mentioned, I do foresee continued gains for each of these companies. That is exactly why I'm invested in them. So with that being said, the very first company I want to talk about is the world's most valuable company. It is Apple, ticker symbol AAPL. Now, Apple is certainly a company that is on my never sell stock list and a company I'm only going to continue to dollar cost average my way into. However, in taking a look at Apple's rate of change over the course of the year with all the ebbs and flows, Apple has certainly made a lot of headway. At the beginning of the year, it was sitting at $134.87. As of right now, it is sitting at around $180 per share. That is a 32.94% rate of change, which is just outstanding. Now, looking ahead, I only foresee Apple hitting that $3 trillion market cap. And of course, while they have certainly experienced some supply chain disruption mayhem, after all, what company hasn't? Apple is going to continue to make a lot of headway moving well into the future. I believe that because they are only experiencing a supply issue and not a demand issue, they are just a ripe company to be invested in and holding on to for a long time coming. Taking a look at Apple's future, it doesn't just come down to iPhone, the Mac, and other Apple devices. They are coming out in 2022 with a virtual reality headset, which I believe is going to deliver explosive growth for Apple. And of course, even further into Apple's future, we have that Apple Car, which I actually believe will be one of the very few EVs that will be incredibly competitive with Tesla, being able to take it on head to head. Now, in terms of Apple's stock share price heading into the future, we can see that analysts are equally as excited as I am, with a median stock share price of $175 per share and a high stock share price of, get this, $215 per share. Now, months ago, analysts only predicted that Apple was going to hit that high stock share price of $199 per share. I was here saying that Apple is going to surpass that, and now here we are, analysts agreeing at $215 per share. And until it gets to those sky-high stock share prices, we could just kick back and relax as Apple's stock share price value goes up and we collect on that dividend of theirs, coming in at a dividend yield of 0.49%. While it's certainly not the highest dividend yield of the world, it's that icing on the cake as we invest in the world's most valuable company. Next up, we have America's second largest bank, that is Bank of America, ticker symbol BAC. Now, Bank of America has had one heck of a 2021, and most importantly for the investor to note is that they haven't seen these levels in terms of their stock share prices in over a decade. So certainly talking about a lot of momentum that was built. Talking about that rate of change, we can see that they actually started the year around $30 per share, and then as the year progressed, they are now hovering around $44 to $45 a share. That is a 48.95% rate of change. And of course, During the last 2 years, they had an explosive amount of revenue generation, just given all the investment banking moves that were made on top of trading and sales fees that have occurred because of all the new investors that came to the table. Now, looking into Bank of America's future into 2022 and beyond, we can see that Bank of America is actually going to do very well, just given that once the 3 federal fund rate hikes actually occur, yields on interest earning assets like loans are actually going to be repriced, and ultimately that's going to benefit Bank of America, allowing for analysts to be equally as excited as I am for Bank of America's future, pricing them at a median stock share price of $50 per share, a high stock share price of $64 per share, and ultimately as dividend investors, we collect on their dividend, coming in at a dividend yield of 1.89%. This is just an incredibly safe bank to hold within your portfolio. Moving along here to our third top performer, we have a REIT, a real estate investment trust, and a REIT that I only foresee is going to be a powerhouse play heading into 2022 and well beyond this upcoming year. This REIT is STAG Industrial, ticker symbol STAG. It is a REIT that was founded back in 2010, and since its founding has just done an outstanding job in growing a very sizable portfolio. At present, they have 517 properties spanning across the United States. Now, they're primarily focused on the acquisition and operations of single-tenant industrial properties, talking about warehouses and distribution centers, with some of their top clients being Amazon, GXO Logistics, and FedEx. This is a company that's only going to continue to scale as we go. Now, throughout the course of the year, and taking a look at that rate of change of STAG Industrials, we can see they began the year at $31.08 a share. They're now hovering around $47, $48 a share. That is about a 52% rate of change. Beautiful growth that has occurred throughout the last year, and only continued growth, at least in my predictions. Now, analysts' expectations have that very same outlook, coming in at a median stock share price of $47.50, a high stock share price of $54 a share, and best yet is their dividend yield, as it's currently sitting at 3.19%. This is certainly a company that you're going to want to get your hands on. Now, join me in jumping right back into the financial sector, talking about yet another big bank. This one is Wells Fargo, ticker symbol WFC. Now, Wells Fargo had one heck of a 2021, but a very interesting last handful of years. We'll talk about that in a second. Worth noting for the investor that Wells Fargo had a rate of change of 62.6%. They began the year around $29.78, where they're now hovering around $48 per share. Now, I picked up Wells Fargo back in 2020 when they were not only dealing with the COVID scares and the fear that hit the market, but they were also still handling regulatory issues in which they were hit with after that big account scandal in 2016. It certainly took its toll on the company, and its stock share price plummeted after that scandal came out. The Federal Reserve went ahead and placed an asset cap on Wells Fargo, but since then it has certainly been in recovery mode, and Wells Fargo, at least in my opinion, is only due to continue to soar. Analysts have those very same expectations, and while that asset cap is not exactly taken off of Wells Fargo, progress is nonetheless progress, which is exactly why analysts remain optimistic about Wells Fargo's future, coming in at a median stock share price at $54.25 and a high stock share price at $67 per share. Now, until it reaches those prices, we can just kick back and relax on Wells Fargo's dividend at a current dividend yield of 1.65%, and a great bank to add to your dividend investment portfolio. And last but certainly not least, when it comes to my dividend investments, the top performer is a direct descendant of John D. Rockefeller's Standard Oil. This company is ExxonMobil, ticker symbol XOM. Now, ExxonMobil had one heck of a year. They began the year around $41.27, now ending the year around $70 per share. That is a 69.6% rate of change. So what exactly has been happening for ExxonMobil? Well, it actually goes back into 2020 when a lot of oil companies across the board decided to reduce the production of oil. However, ExxonMobil took a different stance, continued to produce oil, and honestly, that drove them into a ton of debt. However, in 2021, that is actually exactly what saved them and helped their stock share price skyrocket, because now they had that surplus of oil. And what do you know, here in 2021, there is just a booming demand for oil. ExxonMobil was able to deliver through on their supply. Now, looking ahead into 2022, we can only see continued demand for oil, and of course, ExxonMobil is also working on their strategy for a greener, renewable energy future, which is exactly what's needed to deliver more confidence for analysts and myself in investing in ExxonMobil, coming in at a median stock share price at $72 per share and a high stock share price over $100 per share, coming in at just $111. Now, most importantly, as a dividend investor and a value investor, ExxonMobil has exactly what I'm looking for, with a dividend yield at 5.77%, the exact type of dividend investment that I'd love to get into. into and just hold on to for the long run. That is it in terms of my dividend investment top performers throughout 2021. However, there is a bonus play here for you all, and this company is Tesla, ticker symbol TSLA. Now Tesla, I'm not going to go far into detail whatsoever about because, well, Tesla, but nonetheless, I want you all to understand that Tesla is performing exceptionally well and is only going to continue to grow, at least in my opinion, well into the future. It is just the dominant player within the EV space. There is no other company right now out there that can even come close to Tesla in their performance. They're growing within the Chinese market, and of course, that Gigafactory opening up in Austin, Texas is going to do wonders for the company. Just before I get to those analyst expectations, let's take a look at where Tesla was about a year ago at $665.99. It has since then jumped to over $1,000, and most importantly now are those analyst expectations, because analysts are expecting Tesla to grow, coming in at a high stock share price of $1,580 per share. Now, in my honest opinion, even that is a lowballed expectation for where Tesla is going to be about a year to 2 years out. I'm really only looking forward to Tesla's continued growth. It is a rock star player within my portfolio. Now, YouTube, that is it. Those are the 5 top performers within my dividend investments, and of course, that bonus play with Tesla. If you like what you heard, you learned something new, drop those comments below. Let me know your thoughts on these companies. If you yourself are invested in them, certainly I am not a financial advisor, so do your own due diligence prior to investing in any of these stock opportunities. Before we close out, tap on that thumbs up button and help me grow this channel. And of course, if you haven't done so by this point in time, please do so by the end of the year here. Tap on that subscribe button. I'd love for you to be on this journey with me, and I will see you all in the next video.